I think we have to see the forest in the trees here. And there's one good part of this bill, and then there's the kind of more ugly reality that it avoids. The ugly reality is, unfortunately, or fortunately, or maybe without taking emotion out of it, we are dependent on fossil fuels for a very long time. It is a necessary bridge fuel. And so we need to, if we're talking about energy independence, it can't happen without us, frankly, drilling more and subsidizing the capital incentives of private companies to go and do this exploration work, which they have stopped, Jason. And the reason they've stopped is that they don't trust that these oil prices will stay this high. And so they don't want to make these outlays and investments for the next 5 to 10 years because they're worried that it's going to be a rug pull, which did happen to them in the back half of last decade and the early parts of this decade. So they're like once bitten, twice shy. They're not going to touch this stuff.
So you're saying oil companies that would do some exploration, it would cost them whatever amount, $2 to get the gasoline out of the earth and then process it, but they're afraid it's going to be negative. They're not going to be able to sell that gasoline. Or
I think they're afraid that the United States government may impinge on their ability to actually process it. That there may be tariffs and costs and taxes that they don't.
Right. They'll be upside down.
Forecast. They'll be upside down. So they just don't want to be. And right now, and you saw this. I don't know if you guys saw it, but like Shell and Exxon and these guys are printing enormous record profits. So their incentives to change the status quo right now is zero. They have the perfect situation right now, which is it's an incredibly energy intensive world we live in. And we don't have nearly enough energy to do the work that needs to get done. And by the way, and you saw this week already where, Putin cut Nord Stream by another 50%. It was already running at 40% capacity. He cut it down to 20%. It's only getting worse. There was an article I posted, Nick, you can put it in, about the Congo, and that they've decided to auction a bunch of land to oil companies. And I think before they tried to heed sort of, the West's directives, and they said, okay, well, let's build a land bank and we'll put a bunch of money in. And so then people in the Congo will have money for things, and you won't have to sell off the oil rights. And only tens of millions of dollars showed up. And then the Congolese were like, they threw up their hand. I'll just read the quote because I think it's interesting. Congo's sole goal for the auction, said the government official, is to earn enough revenue to help the struggling nation finance programs to reduce poverty and generate badly needed economic growth. That is our priority, he said. Our priority is not to save the planet. And it's quite a stark statement when you read it. But the reality is, in one generation, what will happen is they will feed the world's desire for fossil fuels. That will generate a lot of revenue. Hopefully it doesn't get pilfered, and so it gets invested in healthcare and education. And within a generation, this country could be in a completely different situation, allowing the productivity of that entire population of that country to do what they think is right. So I'm generally of the belief that Friedberg's right on this.
Do you think, though, we should subsidize EVs to increase the percentage, and then also for solar? Just give me those two, Chamath. Solar and EVs. Do you think they should be subsidized or not in the United States?
It depends on how and at what point of the market cycle. The government's job is to create economic incentives that tip the balance of power towards investment. So if you are sitting here 15 years ago, the price of solar panels was sky high. It was incomprehensible that we could make solar equivalent to any other form of energy. The only way that we were able to close the gap was through government subsidies. But what that did was allow a bunch of companies to build businesses, to make revenues, and then also to make profits that then the public markets valued. Those public markets then put pressure on those companies to take those profits, to become more efficient, to make the panels cheaper. And 15 years later, we're now at parity. So that was a really great example of the government stepping in to smooth out an imbalance in the investment incentive of the private markets. That is where they are exceptional. So in any market, they should be able to do this. But I think what Friedberg is saying is when then they do it successfully, and a market starts to germinate on its own, where supply and demand happens naturally between the private markets, the worst thing a government can do is step in, because it completely perturbs what true supply or true demand is. And that is what causes all of this crazy stuff that we deal with.
J-Cal, fast forward, assume that there's a $7,500 tax credit for EVs that artificially makes EVs cheaper, and then a better technology than EVs comes along. Let's assume it's some nuclear fusion, cold fusion, Mr. Fusion car, like from Back to the Future. And that car inevitably has to fight against the cheaper car because the cheaper car is subsidized by the government. We see this in a lot of markets that already exist in food, in energy, in infrastructure, where government subsidies that are embedded in the operating model of that industry, and that industry becomes kind of reliant and dependent on it, totally distorts the ability for the market to naturally transition to a more productive, more efficient state. And that more productive, more efficient state ultimately is cheaper, better for consumers, and better for the planet. And we hold ourselves back when we insert government dollars into well-functioning markets.
Sachs, what are your thoughts on the government giving these type of subsidies to accelerate solar and EVs?
The whole bill seems anachronistic. First of all, it's raising taxes by $739 billion at a time when we're entering a recession. I don't know any economist who thinks that tax increases help the economy. We just talked about how the economy is in a really tenuous position, so this is not the right medicine right now. Then you've got the fact that the vast majority of the spending in this bill goes to these, energy subsidies. They're not going to help the average person. There's very little money in this bill that helps the average working class person. These are basically handouts. There's basically pork barrel spending for Democratic Party donors and special interests. And like Freeberg, I think, just articulated very well, they're not necessary right now. What's driving demand for electric vehicles and solar panels and so on is, first of all, the products just keep getting better and better. And second, they keep moving down the cost curve. As technology and innovation gets better, these products get cheaper. That's what's fundamentally driving the demand. We don't need the government now, again,
we need to accelerate it.
In an anachronistic way to shovel out all this money at a time we can't afford it. And I'm glad that $300 billion of the bill is supposedly going to deficit reduction. I hope those numbers actually materialize. But we're still $30 trillion in debt. And now that interest rates have gone from basically 0 to around 3%, the imputed debt service on our debt's basically has increased by almost $1 trillion. That is a lot of money.
So just like somebody who had a variable mortgage, the United States is on a variable mortgage with our debt. And so when interest rates go up, we're going to have to pay more interest.
So if interest rates stay at this, call it 3% level, which is roughly where the 10-year T-bill's been, bouncing around at, that is a lot of debt service, $1 trillion a year of debt service. So I think we're probably entering an overall era of austerity that lasts more than just this year or even this presidency. And I think we'll look back at all this wasteful spending, this last 10, 20 trillion of spending as money we didn't need to spend that we're going to be paying for a long time. So to be shoveling out another 300 billion plus of these programs, and once again, going to corporations and special interests, not to the average, person who needs it, it's just so irresponsible.